you had the chance to buy Amazon stock back in 2001, after it had crashed 90%, but before it became a trillion-dollar company, would you have done it? Most people say yes, but the truth is, almost no one did, because back then, Amazon looked uncertain, unproven, and risky. It was being built for a future that the world hadn't caught up to yet. Sound familiar? That's exactly where XRP stands today. Most investors are too focused on the short-term noise to see what's actually happening. They look at charts, headlines, and lawsuits. But beneath all that, Ripple is building a financial network that may one day be as fundamental to money movement as Amazon is to commerce. And that's why some analysts, and even former skeptics, have started calling XRP the Amazon of finance. Welcome to Crypto Equation, where we don't chase hype, we decode it. Because when you understand what's actually happening under the surface, the noise fades and the opportunity becomes clear. To understand why XRP is being compared to Amazon, we need to go back to what Amazon actually was in its early years. In the late 1990s, Amazon wasn't profitable. It didn't dominate retail. It was just a risky, misunderstood tech company trying to reinvent how people bought things online. Analysts called it a fad, a bubble, a company with no real path to growth. Then quietly, Jeff Bezos shifted the business model. Amazon wasn't just about selling books. It was about building infrastructure, servers, logistics, data, payments, the invisible rails of digital commerce. That's when Amazon stopped being a website and started becoming a network. That shift changed everything. And today, Ripple and XRP are in the exact same position. They're not just trying to move money, they're building the rails of a new financial internet. Let's look at what that means in practice. Ripple's network connects over 70 countries and hundreds of financial institutions. Their system, called RippleNet, uses on-demand liquidity powered by XRP. That's not theoretical. It's already handling real transactions in corridors across Asia, Latin America, and the Middle East. When banks move money across borders, they need liquidity, capital parked in different currencies just to complete payments. That's trillions of dollars trapped in the old system. Ripple's solution eliminates that inefficiency entirely. Instead of pre-funding accounts, banks can simply convert into XRP, send the value instantly, and settle in the destination currency within seconds. That's not a crypto dream. That's enterprise-grade infrastructure being used right now. It's the same transformation Amazon made when it turned from an online bookstore into a logistics and cloud empire. Ripple is doing that for money. Here's where the comparison gets really interesting. When Amazon built its infrastructure, servers, delivery networks, cloud systems, most people didn't understand it. They thought it was wasteful. They couldn't see how AWS, Amazon Web Services, would one day power half the internet. Ripple is building something just as invisible, but just as world-changing. It's connecting liquidity corridors between nations. It's negotiating with central banks on CBDC interoperability. And it's positioning XRP as the universal translator for value, a neutral bridge asset that connects currencies, blockchains, and institutions. Just like Amazon quietly built the pipes of the digital economy, Ripple is building the pipes of the financial one. That's why this comparison isn't hyperbole. It's structural. The early days of every transformation are messy. 95%. Amazon's stock fell during the dot-com crash. Investors called it dead. But those who understood the underlying network stayed patient. And that patience was rewarded 1,000 times over. XRP has gone through its own dot-com crash moment. It faced regulatory uncertainty, lawsuits, delistings, and endless doubt. Yet through all of that, Ripple kept building. They expanded corridors, signed new partners, and even increased on-demand liquidity transactions tenfold since 2020. They did exactly what Amazon did, ignored the noise, focused on the mission, and outlasted the panic. That's what real companies do. And now, just like Amazon after the early 2000s, Ripple is emerging stronger, but this time with regulatory clarity on its side. The 2023 court ruling declaring XRP not a security for secondary sales was the turning point. It cleared the fog, it brought exchanges back, and it reopened doors that had been closed for years. Meanwhile, global financial systems are modernizing faster than ever. Banks are integrating ISO 2022. CBDCs are in development across dozens of nations. Tokenization of real-world assets is projected to exceed $16 trillion by 2030. And at the center of all that, there needs to be liquidity, a bridge asset that can move value instantly and universally. That's where XRP fits in, perfectly. So what happens next? If Ripple executes on its roadmap, connecting more corridors, expanding institutional adoption, and enabling tokenized assets to flow through the XRP ledger, demand will eventually shift from speculation to necessity. That's when price discovery gets real. Because liquidity-driven demand doesn't come from retail traders, it comes from volume. And when banks and institutions start needing XRP for settlement rather than speculation, the numbers change fast. That's why many analysts are calling this the Amazon moment for XRP, the stage where it looks small, slow, and misunderstood right before exponential growth begins. Because that's how every great technology story starts. Quiet, doubted, inevitable. But let's address the question everyone's thinking. Can XRP really scale to Amazon's level of influence? Can it actually become the backbone of global money movement? The short answer, it doesn't have to replace everything. It just has to connect it. Amazon didn't replace every store. It simply built the infrastructure that allowed commerce to move online. Ripple doesn't need to replace banks. It just needs to connect them. That's what makes its upside so asymmetric. Even modest adoption creates outsized results. Think about what happened when Amazon's infrastructure reached scale. Suddenly, it wasn't about selling books or electronics. It was about hosting the world. Every website, every business, every app needed Amazon servers. That invisible dependency turned Amazon into a trillion-dollar empire almost overnight. Now look at XRP. It's not trying to compete with thousands of coins for retail speculation. It's quietly becoming the liquidity engine that other systems depend on. The more networks connect to it, the more efficient the entire ecosystem becomes. That's the same compounding network effect that turned Amazon from a store into a platform. Most investors still don't grasp that value in modern markets. It comes from infrastructure, not hype. Infrastructure doesn't make headlines. It just becomes indispensable. That's exactly what Ripple is building. Every time a new payment corridor goes live, every time a central bank tests CBDC interoperability through Ripple's system, XRP gains relevance. You might not see the price jump immediately, but adoption is quietly stacking volume beneath the surface. When that demand pressure finally meets limited supply, you get explosive repricing. That's why comparing XRP to Amazon isn't just marketing. It's mechanical. Both built invisible systems that changed how the world operates, and both were doubted until the data proved them right. But there's another layer to this story: timing. Amazon's breakout didn't come in a single year. It came after a decade of groundwork. Then suddenly it appeared unstoppable. Ripple's been laying that groundwork for more than 10 years. They've survived bear markets, regulation, lawsuits, and competition, and yet they're still expanding. That resilience tells you something. Projects built on hype fade, projects built on utility endure, and Ripple's endurance is what gives XRP its long-term edge. Now let's talk numbers. RippleNet handles billions of dollars in transactions each quarter. Its partners include global giants like Santander, SBI, and Tranglo. Those corridors are the seeds of something much larger, a mesh of interconnected liquidity pathways that eventually make XRP indispensable. On top of that, tokenization is coming fast. From real estate to equities to carbon credits, the token economy could reach $16 trillion by 2030. Those assets will need a neutral settlement layer to move across blockchains and borders. The XRP ledger already has that functionality, built in from day one. If even a small fraction of that tokenized value flows through XRP rails, the required liquidity multiplies many times over. That's how exponential curves form. Slow, then sudden. When you step back and look at the big picture, the parallels become undeniable. Amazon revolutionized how information and products moved online. Ripple and XRP are revolutionizing how value moves globally. Both faced skepticism, both built in silence, both focused on infrastructure rather than hype, and both will ultimately be recognized not for what they sold, but for what they connected. Of course, the journey won't be smooth. Amazon faced its own crisis when the dot-com bubble burst. Its stock collapsed, investors fled, and only those who understood stayed. XRP has lived through a similar storm, a multi-year lawsuit, delistings, and public doubt. But like Amazon, it's still standing, stronger, leaner, and more relevant than ever. History doesn't repeat exactly, but it rhymes. Every revolutionary system endures skepticism before it earns respect. So, what does this mean for you, the investor watching right now? It means perspective matters more than prediction. If you understand that XRP is an infrastructure play, you stop worrying about daily candles. You start thinking in cycles, not seconds. You accumulate, you learn, and you wait, because infrastructure always pays the patient. If XRP follows the same pattern Amazon did, the next few years will look boring before they look historic. That's when conviction counts. because the crowd won't see it coming until it's already happened. Picture this. It's 2030. Cross-border transactions settle in seconds. Central bank digital currencies and tokenized assets flow seamlessly between countries. Corporations use blockchain rails daily without even mentioning them. And deep beneath that system, XRP moves value invisibly, the way AWS moves data today. At that moment, the world won't be asking if XRP works. They'll be asking how they missed it. They'll call it luck, timing, maybe even manipulation, anything except foresight. But you'll know it wasn't luck. It was logic. It was patience. It was understanding infrastructure before the headlines did. That's the real takeaway. When analysts compare XRP to Amazon, they're not promising identical returns. They're recognizing identical patterns. A misunderstood company building invisible rails, a patient community enduring doubt, and a market that underestimates what happens when adoption finally compounds. This is the Amazon moment for XRP. It doesn't feel exciting yet, but neither did Amazon in 2001. And look where that story ended. Dash. If this perspective helps you see the bigger picture, subscribe to Crypto Equation, the channel that decodes crypto, finance, and investing with clarity instead of hype. Because every cycle has its Amazon. The only question is whether you'll recognize it before everyone else does. This is Crypto Equation, helping you think smarter, stay patient, and position ahead of the curve. See you in the next one.